Good morning. I think I'm breaking the trend of Scottish accents here, but I'm delighted to be here. I'm Amanda Sourry. I'm the head of our foods business at Unilever, and I've been in this role for just over a year. What I thought we would do this morning is start by taking a look at the portfolio. Because if you look at the period from 2008 to now, you can see that we have quite significantly focused our portfolio on three core categories where we've got very strong positions: savory, dressings, and spreads. And in fact, the other foods business that in 2008 was 15% of the portfolio is now only 5% of the portfolio. I think the other very significant shift to look at over this time period is the share of the portfolio that is now represented by emerging markets. So back in 2008, 30% of the business was in emerging markets. Now it's at 43%. And I'm going to talk a little bit later this morning about foods and emerging markets. If we shift and look at performance, we're regaining our growth momentum, and I want to underscore that. If you look at the first 9 months of this year that we've published, you'll see that our foods business is growing at 2.1%. That's obviously significant given that if we look back to 2014, we had a foods business that was at negative 0.6%. We kick-started growth again in 2015, and I'm very pleased to say that we've maintained that momentum in 2016. I think it's also important that we drill down on that a little bit. And in fact, when we look at our savory dressings and our professional markets business, our Unilever Food Solutions business, as we call it, then we're driving, in fact, very competitive growth rates up at 4.3% for those businesses. And Graham has already commented this morning on the fact that our spreads business remains challenging, and I'll also say more about that in a little while. I talked earlier about the share of our business that's now in emerging markets. And I think when you look at this next chart, you can see why that is so important to us. And it remains a huge opportunity as we go forward. But we're growing our foods business in emerging markets at 8%, so very healthy and competitive growth rate. And in fact, if we look at our performance overall, then we are driving competitive growth in our key markets. You can see this in the savory share numbers, in the dressings share numbers. And I think just a reminder, though I'm sure everybody in this room and on the call knows it, that the foods business is an accretive business at a core operating margin level to Unilever. And in fact, in the period 2011, when we first started reporting COM, to 2015, we added 70 bips of growth to the COM line as well. We're very clear about what the role of foods within the overall Unilever portfolio is. It's about accelerating growth, it's about maintaining the strong profit and the cash flow that we derive from that. And I think that we're also increasingly clear about what the purpose of our foods business within Unilever is. And that's captured by these words of, it's about food that tastes good, does good, and doesn't cost the earth. That is fundamentally aligned to the Unilever Sustainable Living Plan. And in fact, for us, it's really about sustainable nutrition. We spend a lot of time understanding what is going on in foods. And you might say that I'm biased because I run a foods business, but I've also been in foods on and off for most of my Unilever career. But it is truly a very dynamic marketplace. In fact, millennials express their identity more through food than virtually any other sector. And there's some important macro factors that are shaping foods. And I thought it was worth taking just a couple of minutes to share with you how we see those. We talk about these as the food energies. There are 5 of them. The first I'm going to start with is trusted choices. And I'm sure you see this as well. Consumers looking for more authentic, more natural options, understanding where things have come from, how they've been made, what the conditions were in which they were made. At the same time, a quest for brave new worlds. And actually, no matter where you are on the globe, this similar dynamic of people looking for more exciting flavors, flavors from other places, higher levels of flavor. Health and wellness has never been more important, and consumers really understand the connection between what they eat and what their health is going to be, both in the short term and longer term as well. And so consumers increasingly eating both for themselves and for their families to feel better short term and long term. FlexiFlow is very much around consumers looking for more flexible ways of eating, more eating happening on the go, more unstructured meal times, and then across the board, a rising set of expectations about the quality of food as well. So they're the 5 food energies as we see them. And so if we then shift against that backdrop to look at our strategy, you can see that we've got 3 key pillars to it. The first is around accelerating emerging markets. The second is modernizing our portfolio. And the third is preserving the very strong value that we've got in our spreads business. Underpinning all of that is the Unilever Sustainable Living Plan, expressed for foods as a commitment to sustainable nutrition, and absolutely enabled by the Connected for Growth program that both Graham and Alan have talked about. So in fact, it's Connected for Growth that I'm going to start talking about, because it truly is the accelerator to everything that we're trying to do in foods. And I'm going to take it on in terms of 4 specific aspects about how Connected for Growth helps us to be more global and more local at the same time, about the importance of zero-based budgeting and how it comes into play for foods. I'm going to talk about the announcement that we made in October about creating a new Global Foods R&D Center, and then I'm going to switch to innovation effectiveness. So let's take them one by one. So more global and more local. I think that in foods we've got what is very much a global portfolio. 50% of the business consists of our global brand equities. 50% is made up of truly iconic local brands. So in creating an organization that is more global and more local, it enables us to be able to be more global, but absolutely executed in the right way at a local market and supported by the brand communities that you've already heard about, but at the same time gives far more flexibility to some of our local iconic brands to be fast, agile, and to some extent unshackled from being part of a global category. We've got a very much market-facing organization. So just as an example of how seamless this is, anybody who's running a foods business in one of our key markets is literally only 1 click away from me as the category president. So that enables both them and me to have much closer connectivity. The second key area is zero-based budgeting. And this is really about instilling an owner's mindset into everything that we're doing and questioning every single item that's on the cost line. And it's not only about the numbers that Graham showed you earlier, it's also about the mindset that we're instilling in the business. And just a couple of examples of some of the kinds of things that we're doing as a result of ZBB. Looking at digitization as a way to be able to do almost everything that we're doing in marketing faster, cheaper, and better. We see that particularly in terms of how we're doing our market research to be able to get consumer responses, et cetera. We're also looking very much at our asset production and our asset deployment based on the learnings that we've had from the very extensive ZBB program that's been talked about already. The third aspect, our new Foods R&D Center, can be a real game changer for us. Our intent is to move all of the global R&D for foods that today is spread over Vlaardingen in the Netherlands, Heilbronn in Germany, and Poznan in Poland into a new foods ecosystem. We've selected that to be at Wageningen University. Now, Wageningen is the #1 agri-tech university in the world, and we have deliberately chosen to be part of an ecosystem. And so Connected for Growth is not only about how do we become better connected internally for growth, it's very much about how are we going to be better connected externally as well, with much higher levels of collaboration and open innovation. And then the fourth aspect on here, innovation, effectiveness, it's really about how do we deploy bigger, better, faster innovation. I talked a few moments ago about how Connected for Growth helps us to be more global with our global brands and more local. That means the ability to deploy faster and with greater synchronicity innovations on our global brands in more markets, but at the same time to be able to go much faster on many of our initiatives that we're doing in a single country. So looking at a norm that's shifting to 6 months from inception to launch, and we've got several already that are beating that number. So if we go back to the strategy, and I talked earlier about the growth rate that we have in emerging markets, that continues to be a key pillar of our strategy as we go forward. And it's really about how do we continue to accelerate our powerhouse markets, markets where there is enormous opportunity for packaged food still, underpinned by positive factors such as continued urbanization, increase in the number of women who are working, and consumers looking for more convenient options, and in many cases looking for more flavorful options from other parts of the world as well. So growing those powerhouse markets where Unilever has also got incredible sales muscle as well. Leveraging very strong local jewels. Many of you who are part of the investor sessions that we had last year in Southeast Asia will be familiar with the Bango brand, for example. And really embedding sustainable nutrition into everything that we're doing in emerging markets. And I will say more about that, as I said, shortly. The second key pillar of our strategy is modernizing the portfolio. And I want to talk about two specific things within modernizing the portfolio. The first is about how we build our brands and how do we build progressive, authentic food brands. The second is about renovating and innovating the portfolio. I believe that this year we have made good progress as far as building more progressive brands in a connected world. Some of you may have seen Love at First Taste, which we launched for Knorr, really a glimpse of a much more provocative brand than we've been in the past. This extended to more than 20 markets. We had more than 2 billion impressions, 70% of which, by the way, were earned, and it topped the Ad Age viral video chart. The second was Strange Witch, which was really very much a user-generated campaign in the US for our Hellmann's business. Again, record engagement scores and a significant step up in our value share in that market during that period. So, as a commercial break, let's just take a look at Love at First Taste.
Hi.
I'm Clayton.
Green.
Nice to meet you.
Nice to meet you.
You have to feed each other.
Eh?
So I'm not allowed to put food in my own mouth.
No, you're not.
You know what?
This wasn't very expensive. You can just ram it straight in my mouth. I love everything that is on this table.
Right, okay.
It's very cute when you feed me, you know?
You like it?
I like it. Hi guys, it's Antonio. I just drove all the way to come and meet Irma for the second time.
Hi guys, so I'm finally back home from my date with Antonio. It was amazing.
So making more authentic, modern, progressive brands, at the same time, modernizing the portfolio itself. And I thought I'd share with you an example of us moving much faster on trends and turning them into actions in the marketplace. And the one that I want to pick up on is the insights that we've seen from multiple sources around the rise of veganism, even amongst people who wouldn't say that they are 100% vegan, so the rise of the flexitarian. We were able to see that. We've created a scalable plan. In fact, we also announced a couple of weeks ago that we're the first major manufacturer to have an agreement with the European Vegetarian Union, and we have got hundreds of products that are now going onto shelves with the Vegetarian Union seal on them, and at the same time executing with impact as far as vegetarian or vegan products in the line, and an increasing number of recipes that we have on our portal that are specifically for vegans. We've got significant work underway on modernizing the portfolio. You can see some examples from the Knorr brand here, modernizing the core bouillon itself, extending into organic variants. We launched a range of natural meal makers into Germany last year, which we're very pleased with in terms of the growth rate of that and the share performance of it, and then extending into more authentic meal kits. At the same time, if we look at Hellmann's, you can see similarly a real modernization of the portfolio and an extension into some adjacencies as well. And so at this point, I thought it would also be helpful for you to see some of the activation that we have around our Hellmann's brand. This is a campaign that ran over the summer in Canada, one of our strongest Hellmann's markets, and I think it really builds the spirit of the brand. Let's take a look.
Do you know what this is? Have you ever eaten this before?
No, I've never eaten that before.
No.
Oh, well, welcome to our farm. Hey, Chuck. Nice to meet you.
So we're gonna crush one of these into oil?
No, we're gonna crush the actual seed to get the oil out. To actually come and see and try and taste and smell and be in this environment, I think it's important for all of us.
We're here, we're gonna have a little bit of a test. Pick a jar with the canola seeds. Let's go with Louis.
This one?
There you go. That's the one.
We crush it to see what's inside them.
It's very important that we're protecting the soil.
Yep.
Do you guys know what 3 main simple ingredients are in Hellmann's mayonnaise?
Vinegar, eggs, and canola oil.
Beautiful. I want to thank you guys. I learned a lot today.
So let me come to the third pillar of the strategy, preserving the value of our spreads business. It's a business that remains without doubt challenging, but I would say that there are some green shoots. And I think it's important to remember that it's only just over a year since we set the BCS unit up. We're really encouraged by some of the consumer response that we see to propositions that are around plant power. So whether it's the relaunch of Flora in the UK, or the extension into a non-dairy variant from the Flora brand, or our 100% dairy-free Baysal, we're seeing positive consumer response to those as well. We're also really encouraged by the uptick that we see in our North American business. And you can see on this slide the increase in our value share over the last year. This is a business team that is very intent on getting through all the cost lines of the business, but also in modernizing the portfolio. You've got some examples here, but I will say I'm very excited about the innovations that are coming from BCS. And then underpinning all of this strategy, sustainable nutrition. And I thought it'd be worth unpacking for a minute or two what we mean by sustainable nutrition. So we know that the USLP is the driver of our business at Unilever. And with sustainable nutrition for foods, what we're really doing is bringing together the commitments that we've got to health and well-being, together with the commitment that we've got to sustainable agriculture, both in terms of reducing planetary impact and also improving social impact, to say that we have to be a business that is about the sustainable production and the sustainable consumption of food. We believe that we're very uniquely placed to be able to leverage this. And so when we talk about food that tastes good, does good, and doesn't cost the earth, there are really 5 areas of focus for us. It's about food that's good for people and good for the planet, hence our commitment to source 100% of our key agricultural materials from sustainable sources. It's about health and well-being, and I think that you know that we're committed to improving the formulations of our products so that we will have 60% of our foods and refreshment products at the highest nutritional standards. To this point, and we published this at the end of 2015, 34% of our portfolio currently meets those standards, and those standards are aligned with the World Health Organization, so they're against some external norms. Third key area for us is around fortification, especially given the percentage of the business that we now have in emerging markets. We recognize that we do and we can, for the future, have even more impact in looking at how, through products that are used on a daily basis, we can really make a difference when more than half of the world's population suffers from nutrient deficiencies. So we're very pleased with initiatives like a fortified bouillon that we launched into Nigeria last year, or the success that we're seeing behind our restaged Blue Band business in Kenya, where we have fortified with higher levels of omega-3, 6, and essential vitamins. We have a commitment to nutritious cooking, to be able to help consumers to be able to make food that suits their lifestyle, but also at increased nutritional value. And we're committed all the way through the food chain at reducing food waste, whether that's about helping consumers to manage food waste that they are creating at home, which is particularly the case in developed markets, or it's about looking at what is happening to food in the growing and the storage, which is the main issue in emerging markets as far as food waste is concerned. So, to sum up, we've got a strong and focused portfolio. We've reignited growth. We're accelerating that growth in emerging markets. I hope you've seen today that we're modernizing the portfolio, starting with our 2 biggest global brands. We're building more progressive, authentic brands in a connected world. We still have challenges in BCS, but are working very hard to ensure that we preserve the value of that business, and all of this underpinned by a commitment to sustainable nutrition and enabled and accelerated by our Connected for Growth program. Thank you.
Who'd like to be first? Yeah, Martin. Thank you, Martin DeBoo, Jefferies. Amanda, it's a sort of philosophical question that you're a sort of expert witness on as a category head, which is, in the new world of Unilever, I just want some clarity on what role the category and someone like yourself is playing relative to the countries, because we've heard you're going to be one click, everything's going very much country category, and you're one click away from that. In your FIF, spreads is now broken out as a sort of semi-autonomous unit, and what we were told 2 years ago is to some extent it would be relieved of some of the constraint, the sort of Unilever corporate constraints. And then outside your FIF, but sort of relevance, is the fact that some of the new dollar shaves and things are being maintained sort of semi-autonomously. So I think there's a sort of philosophical question here, which is relevant to Alan as well as you, but you're on the podium, of what is the role of the category now within Unilever, and how are you resolving this sort of contemporary dilemma of local focus versus global category focus?
So I think the first thing I want to say is I don't see it as a dilemma at all. I think it's an enormous opportunity. And one thing it's probably worth stating is that all of us who run categories have also run countries as well. And so I think that we all see this as the opportunity to make sure that we're developing global strategies that are not just top-down, but they're strategies that are born from insights in local markets as well. Certainly for me in foods, one of the things that I see is that the food energies, for example, that I showed earlier, you see everywhere in the world. The expressions of them may be slightly different at a local level, but actually there is enormous consistency in those trends across the world. And so for us as category heads to be able to see where there are these macro forces that we're able then to be driving big global programs against, for example, is I think one of the benefits that we'll have. At the same time, I think by being more local and more global, there's the opportunity to take things that are fantastic examples of either innovation or communication or other activation that are brands in markets, and then to be able to deploy them at speed. And to have those things really enabled by the brand communities that we'll have set up, so that that becomes a much more organic process than relying on people having seen it, and then how do you persuade someone else to do it. So I think that really is the beauty of the model that we're going to.
Hi Amanda, it's Warren Ackerman at SocGen. The group margin ambition has just increased to 40 to 80 basis points. Where will you get that kind of margin expansion in your category, given the starting margin is already quite high, and you've told us that the BCS margins are already now above 20%. Can you maybe outline the kind of cost opportunities, or the either geographies or the subcategories within foods where you'll see that kind of margin expansion? Or, I mean, do you think you'll be able to do better than that average medium term?
So the range that's been set by Graham is obviously at a group level, and then we run a portfolio strategy, and you're absolutely right in pointing out we start from a very strong base already. That being said, do we see opportunities to continue to increase the margin? Yes, we do, and we're working at a very granular level to be able to identify where within some country category cells there are opportunities. We're leveraging the full ZBB program, as I hope I showed this morning, to also look at where there are margin opportunities to be had, and then obviously looking at how do we leverage the NRM program that we have to be able to drive further gross margin accretion as well.
Stuart, yeah.
Do you mind sharing a bit more about BCS? You kind of sprinted past it rather than jogged by it. So can you preserve the value in BCS if sales remain negative? And how can the foods business actually accelerate its growth if BCS remains negative? And, you know, a couple of product launches probably isn't going to turn it around.
Yeah. So I apologize if it looked like it was a sprint past, so we'll try to do the jog on it. I think you're absolutely right in pointing out that it's very difficult to preserve the value if we don't see a shift in the top line trajectory for the business. So hence the importance of modernizing the portfolio to start changing the dynamics on the top line of the business. At the same time, when we talk about the profitability of the business, one of the very significant shifts is to focus not just on comm, but on cash comm in this business as well. And we're coming off a period of very high investment. So many of you will be aware of the fact that we had a significant investment into new supply chain capability in North America. So the period of big CapEx is behind us as far as spreads is concerned. And that really is one of the levers that we're using to be able to preserve the value in the business.
Okay, we'll take one more question before we break. If there is one more question. If not, then we'll break.